Well, good morning, everyone. I think we'll go ahead and get started with this month's edition of our small business webinar series. A couple of housekeeping notes before we get into kind of today's session. First of all, the website, which you logged in from today, on the left, you'll see past recordings. So if you ever want to go back and look at one that you missed or one you want to share with somebody, or just maybe get some presenter contact information for a follow-up question. All of those recordings are stored there, as well as usually a hard copy of the PowerPoint slides. So if there was a particular web link, maybe you didn't write down in time before it advanced on, those are available to you whenever you want to do that. So we also list our sponsors for this series on the website. So if you ever want to look back and see who brings this to you, you can certainly do that. In terms of our key sponsors, they've sort of been consistent for quite a long time. The Small Business Development Center Network, Montana Department of Commerce, SBA, Montana State University Extension, the Montana Economic Development Association, the University of Montana, and also Grow Great Falls Economic Development is our folks that bring this to you at no charge. So encourage you to take a look at those resources and utilize them whenever you get a chance. Next month, I also want to make an announcement for our April edition, which will be April 3rd, so our first Thursday of the month at 11 o'clock. So mark your calendar there, and we're going to have an interview with an entrepreneur. So Jennifer Renaud will be joining us, and she's the owner of Thrive Cycle, an indoor cycling studio in Great Falls, and sharing some of the successes and obstacles and challenges she's had along the way. So that will be April 3rd at 11 o'clock. So please mark your calendars if you'd like to join us for that and learn a few lessons from Jennifer, someone who's been successful at running a small business there specifically. So for today, we have the privilege of having Jill Kohles with us today, and she's with Grow Great Falls Economic Development. They're in Great Falls, and she is a Great Falls native, so one of the lucky few that got to stay in their hometown. And she's really passionate about helping support her community and help make a difference. She's worked in the financial world for over 2 decades. In a lot of different roles, including residential, commercial lending, insurance, has dealt with trust accounts, financial counseling. So she really believes that small business is a really important part of the backbone of the economy, driving innovation, creating jobs, and helping foster local communities. So before I turn it over to Jill to share some of her expertise, just want to remind folks, please send questions in throughout the presentation through the chat window, and we'll ask those to Jill when we get kind of a natural pause in her presentation. And then at the end of the presentation, we'll have an opportunity where you can continue to send questions in via chat window, or if you'd like to unmute and ask questions to Jill directly, we will do that at the end of the session there as well. So thank you everyone for joining us. And Jill, I'm going to turn it over to you.
Great, thank you so much. Thank you everybody who is attending, and again, let us know if you can't hear me or if there's any technical issues, but I'll do my best with this slideshow. So again, I'm with the Great Falls Development Alliance, and today I'm going to talk kind of about the type of lending we do, and specifically really our bridge and gap financing. I'm going to touch on some of our brownfield cleanup funding, and then move into the SBA 504. And all of these different tools that I'm going to talk about would be available to help kind of that capital stack, that need for businesses to grow or innovate or get to the next level, or even start up. So we're going to jump right in to kind of my focus today, which is going to talk about the mission behind our GFDA funding, and I'll refer to us as GFDA a lot of times, but that's the Great Falls Development Alliance, our funding and what our funding typically looks like. Now, I'm going to say typically because we fund the whole gamut of businesses, entrepreneurs, startups, and so very much so, since we fund different projects and businesses, there really is no typical deal. No deal is ever alike. And so when I say typically, that is very much what it is. Every deal is unique. So our GFDA bridge and gap financing, what that is typically We partner with your bank or credit union to fill a gap in financing that the bank cannot cover and that the client cannot cover. And this type of financing is needed to help your business or project move forward. Oftentimes, we are in a second lien position behind your primary financial institution, but there are times when we may be the only lender involved. So just to give you kind of a working example, let's say an entrepreneur has $100,000 need to buy a piece of equipment. And the bank says, okay, the bank or credit union says, okay, well, we're able to lend you 65,000. And you have about 25,000 that you can bring to the deal, but there's that $20,000 gap that, where does that come from? You don't have it, the bank won't lend it. Is your project dead? Can you move forward? What do you have to do? And that's where a lot of times we can come in and play and fill that role. Who do we lend to? We can lend to startups, we can lend to existing businesses, nonprofits, commercial developers, or even housing developers. And how we really get started first is we need to define what the need is of the business. So we really like that initial call to happen with the bank, with credit union, with the client, to talk about what their needs are. So this initial conversation again is a lot of listening, because a lot of times businesses or entrepreneurs come and say, well, I need money. I need money to take my project to the next level. And when we actually listen to what their needs are, money might not be the only solution. And it might not even be a solution. It might be other options and items that we have available or that the community has available that will help that project move forward. So it's really important at the start to really have that conversation and listen to what the needs are and help meet the entrepreneur where they're at. So once we get through that, we like to talk about the capital stack, and that's just a kind of a fancy way of saying, where are the sources of money going to come from? What are this money? What is the uses? Where is this money going to be put to work? And when we really start defining where that money is and where it's going to go to work, that's where we can determine, is there a gap? Is there a need? What products are available out there that can help get this deal closed and done? Um, and again, just to reiterate, sometimes that capital stack, there's a piece of it that isn't necessarily financing. Maybe it's what is the bank uncomfortable with? How can we have your bank or credit union take a little bit more of the project on? Do we need to look at your projections, your assumptions? And that's really where we can utilize other resources like a small business development advisor or a mentor to help kind of define those, to make the packaging to the bank more comprehensive and maybe more desirable for lending. So there's a lot of different things when we look at the sources and uses of a project that we can kind of help define and move it forward. So that being said, what does our gap and bridge financing look like? What is the benefits to the borrower? Since we work in partnership with all the different agencies, we really like to not put out a feeling of competition. We want people to come to us to be able to problem solve and move projects forward. So we don't compete with banks, credit unions, or their financing. So our interest rate tends to be 1% to 2% higher than what the bank rate is. And that's twofold. Really, again, we recognize the importance of a business owner having a banking relationship. So we never want them to um, pay us, keep us and pay back the bank and not have that banking relationship. It's so important. And we also want our funding to be paid back so we can take our limited funds and put it into the next project. But where we can really be beneficial in helping business owners is our flexibility. We can take a little bit more risk if the project is warranted. And with that being said, we might be able to look at what the need of the business is to fit our financing into their package. So maybe the first 2 years is going to be a very much a ramp up year for the business owner. So we might look at doing interest only payments for longer than the bank would, because we know that they need to have more time with a lower payment. We might be able to extend the terms out longer, so that lowers the payment. So we really take a look at what the business needs, how they need to cash flow, and help structure our loan around that. Um, so that's one way we can be very helpful in the overall capital stack of that business. We also don't have any prepayment penalties, and typically can, if there's um, growth along the way, or maybe even a hiccup, and sometimes rapid growth creates hiccups that are not intentional, and it's not bad because the business is growing. We can kind of help play roles along the whole growth of that business to help them. So we can be a good partner with that. And really the benefit is, if there is no other way to move the project forward, we can kind of come in and fill that gap, or bridge that need for clients. Where do we lend to? I kind of brushed over that earlier, but we typically, our focus is on our Great Falls trade area, which is about 13 different counties. That's what we consider our region for lending, and so we kind of try to stick into that kind of trade area. So I'm just going to move into the next slide. I can get my cursor over there. So I kind of want to touch base now on our brownfield cleanup funding, and why this one kind of is deserving of its own category is because sometimes when business owners or entrepreneurs want to look at starting or expanding, they are looking at a place to do business. So investing in real estate for a business owner is a huge commitment, and we want to make sure that they're protecting themselves as much as possible. And so with that, knowing what you're buying is always encouraged. And so when there is a buy sell in place, we oftentimes encourage an entrepreneur to get what's called a phase one or a phase two. What that is it takes a look at the property, and takes a look and see if there's any contamination that may affect the property. For example, if the building is older, there might be asbestos or lead-based paint that, once you purchase it, becomes your responsibility to abate and have properly taken care of. Maybe you're buying a building that used to be a gas station, or there was a gas station next door, and unbeknownst to anybody, there was a underground petroleum tank that, once you purchase this property, it becomes your liability. So when we're talking to business owners who are looking at purchasing, we always encourage them to look at if the phase one report is necessary. And what a phase one is basically they do kind of a high level overview of the property and see if there's potential for contaminants. And then they determine in that report if a phase two is necessary, which is a more in-depth, deep dive into what that could be. Now at the Great Falls Development Alliance, we do have assessment funding that could be available once you're under a buy-sell agreement, to be able to have those assessments paid for. So we do encourage, that kind of collaboration to see what's available. So moving into more my realm, then, if there is determination that there is cleanup that has to happen, sometimes a traditional financier, it would be hesitant in lending until that cleanup is done. They say, we our collateral is that building, and if there's contaminants, does that compromise our collateral? And so we offer through GFDA low interest rate funding, where it's, like a 3% interest rate, to lend to that business to clean up that property so it can move into the next stage of redevelopment. So really, that is a gap that's needed to get more traditional financing. And why the interest rate's kind of lower on that is because there's no financing typically available for this. And so it's not a competition with the bank. The bank's like, yes, please lend on it, take it, get it cleaned up, so it's ready for us to lend on. Really, this financing piece is so that the property can be cleaned up and used for redevelopment for our community. The last type of funding I want to talk about is our SBA 504 funding. This is very similar to our Great Falls Development Gap and Bridge financing, but it's a little different in how it goes about. So we are agents of this program. It's a government program, and we act as agents of it. So we have a little bit less flexibility in the product itself because it's a government program. We have to check the boxes. Um, but where it's and also on this program, we are able to offer this program statewide. So if there's an expansion that there's a business in Great Falls and they want to expand to Missoula, or even if somebody in Missoula calls and says, hey, I like this program, we can help people out statewide in this program. And it's very similar how I described our gap lending earlier, where there's a piece of the puzzle that needs to get filled. It's similar to that, where the SBA will lend up to 40% of the project. And their lending is up to 25 years at a fixed interest rate for that 25 years. So that's a very beneficial program, because typically you will see with commercial lending, it might be fixed for 5 years, but then it has a variable interest rate. So the interest rate can fluctuate. And then at 10 years, you might see a balloon payment. Whereas this one is for up to 25 years fixed at whatever the rate is at the time of closing. Right now, the interest rates, and it can change every month, but is right in that kind of 6% range, which right now is very appealing for today's market. And how the 504 works is, I'm going to just use an example. I'm going to say, let's say you're purchasing a building for $1 million. The other benefit of this program is the down payment requirement for the SBA is anywhere from 10 to 20%. So if you're an existing business buying this building for $1 million, the requirement might only be a 10% contribution. Sometimes when you're looking at these big purchases, they might want a typical financing or even gap financing. They might want to see you into it 20 to 40%. So it really helps your down payment requirement and helps you keep some of that cash in your business for working capital and doing the other things you need to do. So that's another benefit. But so just give you an example again, like you're purchasing a building for $1 million. You go through the qualifications and get kind of pre-approved through this program, and the bank is on board and they're working with it. And how it works is the bank will actually finance 90%, and I'm just using again typical scenarios, 90% of the business. So they'll close. You have to bring your 10% to closing. The bank will bring their 900,000, and you close on this loan. You move in. What the SBA does then is they close their loan, and they will pay up to 40% of that back to the bank. So your final structure is your bank will be in it for 50% or 500,000 at their interest rate at their terms. But then you have 40% of it. So in this example, 400,000 that is fixed for 25 years at the 6% interest rate. So that really helps you lower your monthly cash flows because it's out for 25 years, so your payment's going to be lower, and again helps you keep that working capital in available for your expansion and your growth. This program is very specific for what kind of uses you can use it for. It is fixed assets, so it's real estate, it's construction of real estate, it's improvement of real estate. So if you buy a building and you need to renovate it for your needs, those costs can be included. Or it's for long-term equipment that is 10 years or more. So there is an equipment portion that you can roll into this as well. The other nice thing about this program, and I'll just kind of touch on this a little bit, is that there is a debt refinancing option. And this is newer in the last several years with the 504. But if you had purchased your building years ago, and maybe now it's coming to the time where your interest rate is um, not fixed anymore, and it's getting up there, and you want to look at securing part of that loan now into a fixed rate, you can actually look at refinancing that debt into a 504 now, again in conjunction with your bank. And something that's new over the last couple of years is that they have started allowing the refinance of government debt. A lot of people have done SBA 7As, and that's talked about a lot. That's another great option. But typically that is the bank's rate. And again, after a few years, it starts adjusting. So we're finding more people needing that fixed rate right now to support their business. And so they have started allowing the refinance of that. So it's a great option for entrepreneurs there. Just to touch on the benefits, again, lower down payment, fixed interest rate up to 25 years, preserves working capital, the payment stability, so you can really have good expectations if you plan on growing your business of what your cash flows are going to look like with your debt. And there's no balloon payment. So after 10 years, it's fixed for the 25 years. Um, there's some great lender benefits. So when you're talking with your bank, they do have to finance it up front, but with the caveat that the SBA pays that back. So really with the bank's risk after that payback, they are in a first lien position with a lower loan to value. So they're in a first lien position with only 50% of their risk, their capital at risk. Um, this also helps come up with some different creative financing for borrowers with the bank because of the lower down payment. It kind of helps get the project through the finish line. The banks or credit unions get CRA credit, and it really helps kind of they get to retain that banking relationship with their client. So it helps kind of retain and grow their business owners. So the last thing I want to touch on really quick is our process at GFDA. Again, I talked about this earlier. We do like to start with the initial conversation, getting everybody on the same page, really, again, listening to the clients, the entrepreneurs, the business owners, and meeting them where they're at what they need, not what anybody thinks they need. We really want to hear it from the client. We are a strong believer in partnership. So we like to have communication to all partners involved, banks, credit unions, mentors, encourage the client to bring in their support network, their attorneys, their accountants, whatever they need to help them be successful. Once we kind of get to the point, we work through an application process, an underwriting process. It's very similar to a bank or credit union. And then go to our board or loan committee for approval. We then, with our GFDA loan funds, we do then offer post-closing services. A lot of times we encourage them to work with the small business center and maintain, weekly or not weekly, but monthly or quarterly meetings. And we maintain a relationship, have annual site visits and kind of grow with the company, keep our services available after closing. A lot of times with our clients, there is lots of services here at GFDA that we can offer. That's just not just financing. Again, we have the business planning. We have through our business development side of things, we have lots of studies. We have access to a whole network of different studies we can pull for clients, and market research we can pull. We can help them work on financial projections, not just now for the startup, but if 2 years down the road you want to say, okay, what does growth look like for me? We refer you for those projections. We have access to what's called Apex accelerators, and that provides technical assistance to clients that might want to look at securing government contracting. And that sounds like, okay, what is that? Well, let's say I offer catering services. If they host an event for the government that needs catering services, you actually have to be, um, you know, you have to be a certain level to be able to secure those contracts. So you have a service, you might actually not even think that it could be used for government contracting, but we offer technical assistance for that. And then again, we just have those business concierge services here where are looking to do an expansion, you want to talk to the city about what that looks like. We can help make those introductions. We have such a network of people that if there is something that you might need, we may just have exactly who you need to go and talk to. So offer just a lot of services other than just financing. But that is all I have. I want to say thank you and then open it up for questions or comments.
Thanks, Jill, for that. We had two questions come in while you're presenting, so I'll start you with those and then I'll open it up to any other questions that come in or if people want to unmute and ask one. So the first one came in while you were talking about the SBA loans. Can they be repaid earlier? Is there a prepayment penalty?
So there is a prepayment penalty with the SBA. It is a calculation though, and it is a declining prepayment penalty for 10 years. So every year, so it's a 10-year prepayment, but every year it declines by 10%. And it's the calculation and it's not like clearly defined the calculation, so I don't want to misspeak. So in general though, the calculation is the fees and interest that would be for that year declining by 10% every year. So usually depending on the amount, by year 5 you start to see that it wouldn't make a significant impact for you deciding to pay that off. But after year 10 there is none at all.
Okay, thank you. The other one, before we
Mhm.
go to the ones that have come in here more recently, is you mentioned your organization serves 13 counties. What if I'm located in Yellowstone County? Is there someone like you in my community?
Sure, and we can look at, I would have to, I can't say off the top of my head, but we have different resources and we could look at that and see if we could put you and connect you with it. So definitely give us a call. We are all about making great things happen in Montana. Great things happen in Montana. They happen for all of us. So we would definitely help put you in connection with people that can help.
All right, thanks. And one that just came in here. What are the required qualifications for SBA 504?
So it's very a lot of the same qualifications that you'll have to do with your bank or credit union. There's not like if you are a new business, that's fine too. They just require more 5% more in your contribution. So instead of a 10% down payment, you would be required to do 15%. But there would have to be the big qualifications are the type of lending that are the type of assets that they lend on, the real estate and equipment. And then other than that, just really what you would see traditionally with your bank or credit union. Um, there is they are a little bit more lenient on um, appraised value. They have a little bit different rules with that and what's called debt service requirement, which is how much they want to see you be able to make. They have a little bit lower typically than a bank or credit union, but really the same terms you'll see with them. If your bank or credit union, because they have to approve you as well, we would just work in conjunction with your bank or credit union to kind of get the pre-approval done ahead of time with the bank's approval. So we can really work in conjunction at the same time. And again, we like to have that partnership with your bank or credit union. So if you're sending them tax returns, you could copy us on the email. So you don't have to necessarily have one pathway with them and one pathway with us. We like to combine them. And if the bank already has that information, they can send it over to us with your permission. So we really, again, want to make it as seamless for the client as possible. Um, Sorry, I'll let you read it out loud.
Okay,
I
I was
just read
just
it
gonna,
from there.
we kind of have a follow-up to that one. Should one
Yeah.
seek financing through the bank before coming to you, or should they start with you?
So there's no really easy answer or typical answer with that. Um, Early and often communications with us and with your bank or credit union is great. Um, I don't. Uh, it's not necessarily about starting the process, but starting the conversation. So if you want to come to us before you've talked to the bank and say, hey, this is my idea, what do you think? We can have that one-on-one conversation. You don't have to start it with the bank first. You don't have to start it with us first. Um, Not every bank or credit union is as familiar with the 504. So sometimes you might want to um, get the information and we can have the conversation together with the bank or credit union. So there's no real typical path. A lot of times we get people that call up and just want to know more about it, more specific to their needs and what will work for them. But we also strongly encourage at the same time working with an SBDC advisor with the package that you're going to present to the bank and to the SBA, because with that, they will want to see that you, with this new debt, you're able to cash flow that, and what's going to come about of purchasing this, what is going to be your projections for income in the future. So again, we are all working together for one same path, and that's getting to the completion of the project for the entrepreneur. So um, a long answer for a you pick your path, and you can start talking as soon as you want to anybody you want.
All right, thanks, Jill. Let me make one more
Mhm.
call here. Are there more questions? And again, if you'd like to unmute and ask it, you're welcome to do that as well. Well, Jill, do you have any final comments you'd like to share with the group?
No, again, thank you for attending. And if you have any questions, I am completely reach out. And if you have a hurdle, I guess I would just leave you with this. If you have a hurdle, just come and talk to us, because a lot of times those hurdles can be solved through talking, or um, a lot of different creative financing. And we have great partners, great bankers, great credit unions. I mean, there's a whole gamut of people that are out here to help you. And so no question is stupid, no idea is bad. So just definitely reach out and see what we can do.
All right. Well, Jill, thank you very much for taking your time and sharing your expertise and a little bit about what you can offer in your organization and some of your partners. We very much appreciate that. We will post the recording of today's session on our website probably by tomorrow afternoon. So if you want to share it with one of your coworkers or go back and re-listen to a portion of this, that will be available to you here a little bit later. Mark your calendars for April 3rd at 11 o'clock. That'll be our next monthly session, and we'll have an interview with an entrepreneur next month as a feature for April. So thank you again, Jill, and thank you everyone for joining us, and I hope to see you in April.